Hi, welcome to FinSights. Today we're going to be talking about Tesla. We're going to be talking with Luke Zimmerman. He is vice president of an investor relations firm. He is based out of San Juan, Puerto Rico. He has worked with companies and has raised approximately $700 million under his guidance and spearheaded investor relation campaigns for 25 public companies. He's also rung the bell on NASDAQ in New York City. And so before we go forward, I'd just like to welcome in Luke.
Thank you, Justin. Excited to be here.
So today we're going to be talking about Tesla, and I know you're a fundamental guy, so is there any reason that the price in Tesla is justified currently?
Yeah, I think the short answer to that is no. The long answer is, I think Tesla's a bit of a cold stock, and they've built a pretty insane retail investor following. Because their products fundamentally are great, but at some point, valuation can still be insanely overstretched. And I think, with Tesla being, the most valuable car company, when it can, it can't really hold the true profit. The profits they've seen, are not really sustainable from, the research I've seen. I think, cheerleading in the media only gets you so far.
Right.
And it's something that, while is, maybe a scary short, I think it's something that I would certainly not be buying at this level.
Yeah. One of the things I'm looking at is, their income right now is negative 862 million, and they're valued at right now. Currently, they're about a $163 billion company. And if we look at other car companies like Ford, Ford is only worth 32 billion versus Tesla, which was 163 billion. So is Tesla really worth over 5 times what Ford is worth?
Yeah, and think about this too. The amount of cars Tesla produces is a ridiculously small fraction relative to something like a Ford, for example, and they don't really do so profitably. And so I think I think I saw a stat a while back. It was like the enterprise value per car that these car makers produce a year. And Tesla's was just like, it was insane. It was like, I think it was like hundreds of thousands or something. While the rest of the car makers were, more grounded in reality. I think, for a low margin business like being a car maker, I know Tesla tries to build themselves as an energy company, but in reality, as of today, they're a car maker. And, trading at over 6 times the revenues is nuts. That's something you would get if you're more of a software company or something.
Right. So what do you think? What do you think would be the value? So what makes it worth 5 times more than Ford? Because Ford is obviously not doing terrible ever since the 2008-2009 crisis. Ford's actually been doing pretty well. I can go ahead and pull up their chart while you talk about that.
Yeah, I think what it causes it. I think it's a mixture of two really toxic things. I think it's one, an insane retail investor base who will buy anything Elon related, and secondarily, you have the sell side analysts who cover Tesla who put out these outlandish $2,000 price targets or whatever. For our listeners who may not know, these analysts, they're not the slightest subjective, because all these analysts, their banks want the next Tesla deal when they raise capital, and that's how they get compensated a lot of money. And so these horribly biased analysts are out here putting several $1,000 price targets out to justify getting their next banking deal. Retail, it gets on the media, and so the media frenzy on Tesla is insane, and those two things get the retail investor base who will do anything that Elon says just riled up, and I think it causes an incredible market. I think you see, right, there's tons of short interest in Tesla, by like hedge funds and stuff, but there's so much buying. I think probably a lot of it retail, that it's just like a battleground stock, and it's something like no other.
Yeah. It's pretty insane. So I would say that we're probably in agreement that it is not a wise decision if you're going long in Tesla currently. It's just
Equity, no way.
Yeah, it's a pure speculation play, if we're being completely objective here. And I love Elon Musk. I think SpaceX is probably one of the greatest things in the last I don't know, 30 years as a private company, being able to start space travel, and then now you have Virgin Galactic. I think that's just pretty incredible for the future of humanity. But I don't think that justifies a car company being worth 5 times more than arguably one of the most successful car companies in the world. I mean, you look at the history of the automobile industry, not a lot of companies stick around as long as Ford has, and they were the first to do it. So to me, as a technical guy, I still like to look at the fundamentals, and right now I just can't justify where Tesla is at. I mean, they still haven't turned a profit yet, and their sales, while it may be getting to the point where they're starting to see some growth with the Model 3 and their new Cybertruck. I don't really think that justifies it being worth 5 times more than Ford. I know they've also got the gigawatt factory and other things that they've started to implement, and they're starting to turn towards solar. And I know you're the right person to talk about that, because you actually, for when we were going to college together, you had your own solar panel company. So I don't know if you want to touch on the valuation of that, if that can play into Tesla's crazy market cap right now.
Yeah, so some of our listeners might know, Tesla acquired a company actually chaired by Elon Musk's cousin, I believe it was, something like that, Solar City, which basically installed solar on residential roofs over the long term, and basically you would pay Solar City in like a monthly, like you pay your power bill, but you pay them, right, and then they just get the power that those panels produce. They have several arrangements. But long story short, it wasn't really the most sustainable model of the company. Was kind of failing, and so Tesla kind of took them on under their wing because they had lots of debt looming, which was about to kind of, I guess, crush Solar City. And so it was, and really an incestuous acquisition. I think other than that, I guess they have a solar panel factory in Buffalo. I know they've been working on. I haven't heard anything on that in a while, so I think it's not going well. They have the solar roof, which which obviously isn't really a thing yet in reality.
Yeah.
And then they have the power wall, which I can tell you, I've seen lots of demand for that. But I mean, living in Puerto Rico, where the power grid's less stable, but
is it $130 billion worth of market cap?
Yeah, no, it's not. And
okay.
So I think they have some cool products, but nothing that could possibly justify.
And how far do you think we are away from actually something like a solar roof from being viable? Because I know the technology in solar panels is still kind of lagging behind. I
think it depends really where you are and in the cost of electricity in your local market. In somewhere like where I was born, Indiana, the electricity is very cheap. Predominantly coal. I think living in, most recently where I lived, California, or here where I live now in Puerto Rico, electricity is much more expensive, and so solar is actually fairly competitive in these markets. And so I think it depends really on where you're based, and I guess how much you value clean power. But from a purely financial perspective, it's come a long way in becoming competitive. And so I think depending on how long you're willing to wait for that break even. Anywhere from what I've seen, 15 to in some markets 30 years, depending on your power cost.
Yeah. So, I mean, we could argue that we're probably 10 years away from that being a viable option for the everyday person and having the demand to justify that kind of valuation, right?
And I still don't think even if this Tesla solar roof was a huge thing, their valuations are so far above and beyond.
Right. I mean, if we look at, let's just look at Apple for a second. Apple is, as far as I know, it's still the most valued company, publicly traded company in the U.S. And granted, Tesla is only maybe 10% of that valuation, but Apple's also producing almost $300 billion in sales, and they've got almost 60 billion in profit, whereas if you look at Tesla, it's pretty grim. I mean, they've only got 24 billion in sales, and they're losing money every year. So what have, as far as your job goes, I don't know if you worry about the other analysts at other companies. So I can see that Argus upgraded Tesla from 556 to 808 a share. Bernstein upgraded it from 325 to 730 a share, and then Piper Sandler most recently, and kind of why we continue this crazy run up. They upgraded 729 to 928. I don't know if you want to touch on that at all, or maybe these analysts know something that we don't.
Yeah, I can tell you. I mean, basically, from my experience with sell side analysts, I think, like I said, a lot of these guys are, while they're supposed to be objective, in reality, these analysts are trying to get deals for their banks. And so
Yeah.
I think you look at any company that's covered, as their stock price moves up, the analysts will always raise their price targets to be a little bit above that. So I would encourage you guys, to look at it, really any company, and tell me that's not the case, unless it's one of the, every analyst maybe has like one company they don't like, and maybe they're like a short on or something. But generally speaking, that's not the case. And so I think when looking at Tesla's coverage, it's something to consider.
Yeah. So last thing is, how were you wanting to play this trade here? I know that we talked about before. We talked about options being a possible way of taking advantage of this. I don't want to call it a bubble, but I mean it's definitely been very heated, and it's likely to have some sort of retracement. That doesn't mean that it's going to drop back down to where it was at like 350, but I would argue that it's likely that we could see at least a 10% retracement, like we did a couple weeks ago, actually. So what are you planning on doing as far as the option side of things go? I know you said you wanted to sell some calls.
Yeah, I think just watching Tesla, it's interesting. This is why I guess I was talking to you about it, Justin, because from a fundamental perspective, I'm like, wow, this is insane. There's no way Tesla can break 1,000.
Yeah, it doesn't make
this
sense.
Is so overextended, and at the same time, I'm not one to, especially on these shorter term trades, for example, selling a call option, which is effectively saying Tesla won't go above a certain level in exchange for the premium someone would pay for that option, which right now, because of Tesla's volatility, is very high. And so I was considering, basically just, selling call options maybe at like $1,000.
Yeah, so you're going to sell an out of the money.
I think the odds of them breaking that are low,
yeah.
And you can harvest a lot of premium. So that's what I've been looking.
Yeah, I think that's probably one of the safer ways. I know it's a negative call, but right now, if we look at the probability on a $1,000 call, I think it was 88% for February 28th expiration date.
It was something
that's
like that.
That's about
exactly.
what I was looking at. I don't know what you got. And so obviously when you're selling something like a call, I think your max. I'm not an option trader, but as far as I know, your max return is going to be 100% at expiration. Is that correct?
Yeah. So basically, the premium that someone pays for that call, you either get basically all of it, or none of it. You lose a lot of money, depending on basically how the stock goes. So your upside's fixed. You can only make as much money as the premium, but I think that's fine.
You don't even need the price to go down this week. You just need it to stay even. You actually only need this to break even. You only need to keep it under, I believe, $1,011 a share.
Yeah.
Yeah, and that's
exactly.
break even.
I mean,
so as long as Tesla doesn't have another crazy, what would that be, about 12% gain this week? I mean, you're going to essentially return 100% on this trade that you're planning on doing. And if we're looking at the daily chart right now, I know you're not a TA guy, but we can see that on the oscillator, the thing that kind of gauges the momentum and the trade, it's finally started to decline on the what's called the histogram. So momentum has declined just a little bit, and then also if we look at our stochastics indicator, that just kind of tells us like where price is based on the past 14 days, and it gets smoothed out, whether it's overbought or oversold. And right now we're definitely in overbought territory. So I would say that's probably a high probability trade, and making 100% in a week. It's something, if you have the capital, that's something a lot of people can do. Now, the margin requirement on that might stop a lot of people if you can't cover the trade in some way. You said the margin requirement is actually like 10 grand. Is that correct?
Correct, and basically that's what you'd lose if Tesla went up. I think it was another like $100 over,
Right.
That just as like a safety net.
Right. So, I mean, theoretically, when you're selling a call, your loss is unlimited, but Tesla also has to break 1,000 before you even start to lose money by the end of the week. So, if I'm looking at the weekly chart as well, I mean, even if you did a longer term option on this thing, we're overbought on the stochastics, and like honestly I've never seen a chart that looks like this where it's so overheated. Where, I mean, the MACD is up to 132. I don't know if I've ever seen that other than maybe the VIX on some of those crazy days we've had, and the RSI, which also kind of gauges whether it's overbought or oversold, it's way overbought. And then stochastics again is overbought. So I would say you're in a pretty high probability trade. We kind of peaked at 968 last week or a couple weeks ago. So I'd say it's selling a $1,000 strike price call option with an expiration on this Friday, or maybe even next Friday if we don't believe it's going to break 1,000 by the following week, then it might be a play the following week as well.
Exactly.
It's been great talking about this. I know a lot of people have been wondering about Tesla, and now we've kind of talked about this too, that we're gonna begin to start looking for these kind of trades where there's next to 90% probability of the trade working out, and you end up making 100%. I think a lot of people would be interested in following that. So if you don't mind coming back on, it'd be great to have you again.
Yeah, of course. I look forward to the next show.
Awesome, dude. Well, I'll see you, or I guess I won't see you because you're in Puerto Rico, but maybe we'll get some kind of a Skype call or something.
Perfect. Yeah, looking forward to it.
All right, man.